With me now is Don Coxe. He's an advisor to BMO Global Asset Management and a keynote speaker here at the BMO Metals and Mining Conference. Don, thanks for being with me again.
Great to be with you, Daniela. Yeah.
Don, 14 new gold mining CEOs this year compared to last year at this conference. What does this say about our industry?
Well, it says that the stockholders no longer trusted management to be able to even deliver an equal value to gold itself. Whereas historically, when gold went up, the stocks went up more because of the optionality of their reserves. And the leverage that they got, that if they might have been making X percent with gold at Y level, but when gold went up to a higher level, they would have leverage in their earnings. Just as the refining industry now, the Valeros of this world, their profits are up by 1,000% just because they're getting a bigger spread on oil. So here we got a bigger spread, but they didn't deliver because they spent money unwisely, and so we've had the spectacle of gold going up the last 3 years, during which time the gold mining stocks underperformed. The only exception to that was the streaming companies, because they don't spend more money except acquiring more streams.
And I think we were saying offline how there seems to be a new religion amongst these new CEOs, Don.
Yes. All of them are announcing that I shall not spend money on new capex that's absolutely necessary. And so what we're laying in is that as the commodity boom continues, we're not going to be having a lot of new mines coming on. In golds, base metals, the sort of story is there because the stockholders made it clear we don't trust you to spend money well. So what we have then is that the ones who are investing for growth and making deals and opening mines way up in the Andes and things like that, they're pursuing another line of work now. And so what this is an interesting thing, described actually in two poems of Milton, which Il Penseroso is a poem about pessimism as a great force in human nature. And pessimism gets in the way of progress. L'Allegro is optimism. We had optimism, and we were growing new mines, and stocks were going up, prices were going up, great new ventures were being done, thousands of feet above sea level mines were being opened. And then when things went wrong, what happens is pessimism comes in and takes over. It clouds people's ability to judge. So what they're saying is, if we get new guys in there, they won't make the same mistakes. And so I have, in my life of following mining companies, I can't recall when there's such unanimity that we don't want to grow the business.
So Don, are you on the side of pessimism or optimism?
I am on the side that the pessimism in the stock valuation is way overdone. And as one of the CEOs admitted to me, he said, look, at $1,600 gold, we're making a lot of money. And things are looking good, but people don't believe in us. And so what we do not have, I mean, we've had these write-downs, and what that was because everybody expanded at once, and there were only a few equipment suppliers. And in addition, some of them merged with each other. And at one point, it got so bad that Barrick Gold bought an interest in a tire manufacturer in Japan so they could get an allocation of large tires needed. And these large tires were selling up to $50,000 a tire. So there was this ability of the capital spending group of suppliers to meet the demand such that the prices escalated. So now they're all going to quit at once. Amazing.
So, Don, the last time we spoke was in September at the Denver Gold Forum, and you were optimistic about the gold stocks. You were expecting them to outperform even the price of bullion. What's your stance today? Has it changed?
Well, I didn't realize how much, first of all, how in many cases, how bad some of the decisions had been. And so there has to be penance in this. And the fact that you've got a bunch of new faces out there, there'll be a certain cynicism saying, well, Okay, it's a new face, and they're swearing that they're not going to spend money, but this is not the stuff of growth. But the other big thing that happened was a sense that the global economy isn't growing as much as we thought. Inflation doesn't seem to come back, no matter how much money we print. And the other thing that went wrong was we agreed at the Denver Gold Conference that re-election of Obama would be good for gold price and good for gold stocks.
Here we are today.
Yes, and Obama has turned out to be even more relaxed about running deficits than he said before he was. And the U.S. is running deficits, the biggest in the industrial world in relation to GDP. Now, bigger than most of the countries in Europe. I mean, Italy looks like a Vestal Virgin compared to the U.S. now, and Italy's in trouble because of past problems. So what's happened, amazingly enough, is the U.S. dollar has been strong because they're depreciating the yen and depreciating the Swiss franc. So we've got a circumstance where, for now at least, that forecast isn't working out. However, I feel confident that if President Obama continues his policies and the Republicans find no way of stopping him, that we're going to have another gold boom, all right. Unfortunately, a lot of misery will have to take place between now and then.
We had Jim Rickards on the show earlier in the week. He's the author of Currency Wars, and it's definitely currency wars is a topic that's absolutely trending right now. And he thinks that the demise of a U.S. dollar is inevitable. What do you think of a stance that's like that?
The only argument is whether the U.S. dollar will seem to be the last man standing, because the idea that we're going to convert everything to gold and gold and silver is not going to happen because there's too many transactions, a financial system there. But what we certainly was amazing, the other development, which I did not anticipate, which turned out to be the biggest of all, was that Mario Draghi came in and he made the most significant statement made in continental Europe since World War II. He said, I'm going to do whatever it takes. It was magic, absolute magic. He didn't actually have to spend a euro, and what happened, interest rates plummeted on European bonds, the euro rose, we had a surge in European bank stock prices. Now, I've always made it clear that don't expect to be making money on gold if bank stocks are outperforming the market. Gold is financial antimatter. It benefits when financial institutions are in trouble and people doubt currencies and so forth. So the euro was the weak point in the global industrial economy of currencies, and the euro suddenly became strong, and it looked like everybody could refinance. Greece didn't get kicked out. And what that did was remove the fear factor from the situation, from people's appraisal. So they sold gold. Gold needs to have fear in there that the existing mechanisms don't work. So I would argue that the biggest single thing that got in there was not Obama or anything. It was Mario Draghi. And we will see whether he can, in fact. The amazing thing is he's actually reduced the size of his monetary base because banks have been paying back loans. He's the only central bank who's doing that. Who would have known?
Don, let's look at the U.S. again. There was a brief concern that the Fed might have ended QE last week, but those hopes were dashed as of Tuesday. Bernanke stating that the bond buying program is nowhere close to ending. What do you think of this policy?
Well, $85 billion a month is an astounding amount of money to be expanding the monetary base. And what this is rewarding those who caused the problem. The biggest beneficiaries are the big bad bonus bailout banks who caused all the problems in the first place. And so they benefit from this because they can't unload the bad stuff off their balance sheets, but this goes into their reserves and they look stronger. And so in addition, the people who had the worst mortgage, made the worst mortgage decisions are being bailed out. The big losers are those who saved and those in retirement and pension funds. In other words, the backbone of the saving part of the financial system, not the speculative part of it. That's the part that's being savaged by this zero interest rate policy. And so pension funds are, more and more of them are getting into serious trouble. And the idea that it's all being done to help the debtors who made bad decisions get by, this is fundamentally immoral. And it's also bad economics.
Don, last time you told me you felt Bernanke was the most underrated Fed chairman in history.
Yes.
You think he has no other option?
I think that's the problem. He is in a position where, because of bad fiscal policy and also these bad social policy, you know, the biggest growth is the growth and what's keeping the unemployment rate down is all these people going in disability, because you can now get on disability if you're depressed. So you don't go outside, you cease to count in the statistics, and you're now at rest, you're being looked after. Your depression is being dealt with. But this fabulous growth in those who are getting disability insurance, this is social policy. They simply changed the rules, and that's, of course, undermining Social Security. Bernanke's not responsible for that. But it's the kind of thing he's dealing with. So what he cannot do right now, then, is apply any kind of Puritan virtue to his side of things. But the longer this goes on, nobody thought at the time of the crash in 2008 we still have zero interest rates now. Nobody. And so now, as Lady Macbeth said, returning were as tedious as to go o'er. How do we extricate ourselves from this when we keep rolling over all the national debt at lower and lower interest rates, and still we're running this gigantic deficit? So Bernanke is, I believe, somebody who's in a desperate situation, and he must maintain the stiff upper lip and must pretend that he doesn't see the damage that's being done. He keeps saying, but if we had better, he doesn't say sensible fiscal policies, then we would be able to make better accommodation here. But there's no sign of that. I mean, the politics are the worst in living memory.
Don, he exits next year. Is there anyone you'd like to see? Who would you like to see as Fed chairman?
There is nobody that I would like to see have it that I would want to curse by putting him in a position where he or she would have to do something they believe fundamentally wrong, because that was the only option open to them.
Don, thank you so much for your thoughts. Any final thoughts for our viewers watching?
Well, it's that we're going to need some kind of fear to get people back on the sensible course. And the Eurozone, I still believe, has greater weaknesses. So before this 13th year has gone out, there will be some bad news for something else, which will turn out to be good news for gold.
Don, on that note, thank you so much for being with me. And thank you for watching our coverage on Kitco News. You can email me any comments or questions at newsfeedback@kitco.com, or follow this conversation on Twitter at Daniela Cambone. Thanks for watching.